I want to quickly talk to you about the top 5 emergency business loans for bad credit, no personal guarantee. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to quickly talk to you about the top 5 emergency business loans for bad credit with no personal guarantee. The cool thing here is that when it comes to emergency business loans, you have a lot of options. Before you even get out there and trying to get a loan, there are a few things you can do. First, you need to examine your cash flow. You have to think about, if you have positive cash flow, you may already have enough money to cover the cost of your crisis without falling behind on upcoming payments. So if cash is tight, however, you may need to shuffle some things around. So to increase your cash flow, you either need to delay outgoing payments or expedite incoming payments. So asking clients to pay you on a shorter timeline than you agreed upon may be tough, especially if you don't have a long-standing relationship with them. If you have a good relationship with your suppliers, though, you may feel more comfortable asking them for a payment extension. Now, another thing you can do, use a business credit card as fast cash for your business. So if you need to make, let's say you need to make a big purchase in the wake of a business crisis, consider using a business credit card. Depending on your credit line, your credit limit and your balance, you may be able to charge the cost of a new point of sale system or an emergency order of inventory to your card. And if you go this route of getting emergency funding for your small business, make sure, and this is very important, folks, make sure that you have enough money to pay off your balance in full at the end of the pay period. If you pay only the minimum monthly payment, you risk racking up even more debt in interest fees, and paying this extra fees can set you back even further than the cost of your crisis. If you don't already have a business credit card, guess what? You can apply for one easily. And the third thing I want you to think about is invoice factoring. So when you need fast funds to deal with a crisis, consider accounts receivable factoring. Here is how it works. If you have pending invoices from your customers, you can sell your accounts receivable to a factoring company in exchange for cash up front. Keep in mind, though, that you have to prove that you have unpaid invoices. We have an entire show focused on the invoice factoring company, so I'm not going to go too much into detail here, but just know that if you can demonstrate unfulfilled invoices, a factoring company will give you an advance on the money owed, which usually amounts to 80% of the full value of the invoice. And then the factory company then pays you the rest of the invoice minus 2 or 3% in fees when your customer pays you. And another thing you can do is to get emergency funding for your small business by selling your equipment. So depending upon the need that you have, you can actually get rid of equipment to actually generate the cash you need. And so selling equipment can give you enough money to take care of your crisis and return operations to normal. You can also apply for a merchant cash advance, an MCA, as an emergency business loan. And the cool thing here is that depending upon the industry you're in, we've seen, according to our research, that merchant cash advances are popular among businesses for fast emergency funding. So with an MCA, you received a lump sum of cash upfront in exchange for a percentage of your business's future sales or revenue. And the cool thing here, this is, if you think about it, this is a collateralized loan. So this is why they're easier to qualify for than term loans. You can usually get the cash you need within just a few hours. All right. And however, though, the price for this level of speed and convenience is quite high. And I really need to say that. The average APR for an MCA ranges from 20% to a whopping 250% in our research. In addition, many MCAs come with hidden fees that can increase the actual cost of the emergency business loan and make it difficult to recover. An MCA, a merchant cash advance company, may give you the money you need to handle an immediate issue, but having to pay down so much debt can send your business into financial crisis in the long run. You can also consider the SBA. So when you need extra cash flow to handle a business crisis, consider working with the SBA. And the SBA was created to assist small businesses with accessing federal resources and navigating their own preparedness plans. And so the SBA provides a number of loan resources for small businesses to utilize when operating their businesses. So before you even think about an emergency loan, an emergency business loan, those are the options you have to think about. Examine your cash flow, use a business credit card as fast cash for your business, try invoice factoring, get emergency funding for your small business by selling your equipment, apply for a merchant cash advance as an emergency business loan, and consider the SBA. Before we get into the actual rankings here, please check out this short evaluation approach video. We do have a strict method when it comes to evaluating, categorizing, and reviewing all the loans, including business loans that we review on this show. Check this out. All right, number 5, we have P2B investor. Our score, 8.5 over 10. This is best for a variety of emergency business loan options. The cool thing here is that P2B investor, known as a P2BI for short, is a peer-to-peer lender that offers asset-backed lines of credit to qualified B2B businesses. In other words, they actually, those loans are collateralized, okay? The company was founded in 2012 and opened its doors to customers in 2014. Let's talk about the pros and cons of this company here. The pros: no credit score requirements. You have high borrowing amounts. The rates tend to be inexpensive, and the application process is fast and easy. And the cons: right now, you can only borrow from them if you are a B2B business. If you're a B2C or C2C, it doesn't work. It's not available to businesses in some industries. They have a restricted industries, and some additional fees are charged, and collateral is required. As I said, this is an asset-backed lines of credit or asset-backed emergency loan, so it is collateralized. And let me give you a quick outlook, a quick overview, if you will, of the terms and fees for a P2B investor's products. So the borrowing amount, you're looking at $500,000 to $10 million. The term length, 1 year. Interest rates, high teens. Origination cost, 1.5%. The APR was not disclosed. And so the process begins with a simple 10-minute online application. You will need to enter basic information about your business and financials and integrate, and this is very important to remember, you need to integrate accounting or invoicing software so that P2B investor can get an idea of the value of your assets. So after you're finished, an underwriter will get in touch with you to discuss your application and your funding options. And if the company has decided your business is a good fit, it will ask for additional documentation to verify all your information is correct. So they will ask for things like balance sheet as of the end of the last closed month, balance sheet as of the end of the last year, income statement, current year, year to date, income statement for full year for the last 2 years, accounts receivable agent report, current year to date, accounts payable agent report, current year to date. And if everything checks out, the company will present you with a preliminary offer for a credit line or emergency loan. And if you agree, P2BI will run a full underwriting review. So after you have finalized the agreement, a lockbox will be set up and you will be able to start drawing from your credit line or your emergency loan. If you have an emergency loan, they will send you all the money at once. And the time from application to funding normally takes 10 days or less. Number 4, we have Riviera Finance. Our score, 9 over 10. This is great for funding unpaid invoices. I was speaking to you earlier about invoice factoring. This is a company, this is a big player in that market. And what are the pros and cons here? You have no credit score requirements. They have competitive terms and fees, easy application process, and no monthly minimums. And the cons, this is unsuited for B2C businesses. So you got to be in the B2B space to actually benefit from Riviera Finance's offer. And let's talk about the terms and fees for invoice factoring with Riviera Finance. Credit facility size $5 to $2 million. $5 to $2 million. The advance rate is up to 95%. In other words, they will give you 95% of the notional value of the invoices, the accounts receivable. The discount rate starts around 2%. The maximum overdue account has to be 60 days. Additional fees, possible early termination fee. The contract length is usually 6 months. There's no monthly minimum, no factor on all invoices, and this is a non-recourse, and you have no notification actually. The cool thing here is that what is a non-recourse factoring? This means that you will not have to repurchase the invoice if your customer goes bankrupt. This is an important protection. If you are a small business owner or you are a solopreneur out there listening to me, make sure that you pay attention to non-recourse versus recourse. All right. So if your customer goes bankrupt, you don't have to repurchase the invoice. You will have to repurchase the invoice in other cases, however, such as if the invoice was inaccurate to start with, or the terms were not fulfilled. And Riviera Finance offers notification invoice factoring, which means that your clients will know that you are using an invoice factor. So once an invoice is approved for factoring, the company takes care of collecting the payments. All right. And we've seen that they are kind of flexible when it comes to contract length. Their standard is 6 months, but they have shown some flexibility according to our research, and they can adjust the contract length according to your needs. Right. And the discount rates also vary depending on the business size and the industry. Typically, discount rates starts around 2%, but they can go lower in some cases. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. I want to talk to you about the top 5 emergency business loans for bad credit, no personal guarantee. And number 3, I've given you already. Number 5, P2B investor. Number 4, Riviera Finance. And number 3, we have Lendio. Our score, 9/10. Lendio is great, is best for an emergency business term loan. So getting a more traditional term loan during an emergency can be tricky, as they frequently have slower application vetting processes. One way to actually maximize your chances of getting the loan you need quickly is to use an aggregator service such as Lendio. So Lendio is not a direct lender. They are a loan matchmaker. They are a marketplace, and they are an aggregator service. So Lendio does not originate its own loans. Instead, it passes your application through its network of lenders to find a fit. And Lendio's borrowing qualifications are easy to meet. You just need to have been in business for at least 6 months, have a credit score of 550, that's pretty low, but that's pretty good, and monthly revenue of at least $10,000. So Lendio does not charge borrowers for using its service. So you're looking at, on average, a day or 2 to get your money through Lendio. So you want to keep that in mind if you need the money immediately. And what are the pros and cons here? Borrower qualifications are lower than the traditional banks would be. You have high borrowing amounts, long-term financing options available, and the application process is really fast and easy. As I said, you're looking at 24 to 48 hours. What about the cons? Rates can be expensive and not as fast as some other options. One thing I want to say here is that while Lendio does not originate loans directly, its network of over 300 business lenders, including American Express, Bluevine, On Deck, Cabbage, and many others, their network is designed to be a one-stop shop for financing. All right. The one thing I want to say is that you're able to actually get all the things you need, get the funding you need from one simple service. In terms of getting the funds fast, it's super fast. It can be super fast. It can be within hours if you actually meet all the criteria and if you find the right lender. through the aggregators platform. Number 2, folks, we have Fundbox. Fundbox, our score, 9.5 over 10. And this is best for same-day business funding. This can't get better than that. If you are in an emergency, you want to think about Fundbox. Lend you, of course, but also Fundbox. Why? Because they can get you the cash you need within hours. Sometimes your emergency can't wait even a single day. While many online lenders are fast, far fewer can get you your money on the same day you apply. Fundbox is one of the lenders that can pull it. They can pull it off. So, though not the cheapest option, though, Fundbox is willing to work with most borrowers. You only need to have a credit score of 500. Think about that, 500. The quick and easy application process is done by linking your accounting or invoicing software. Then Fundbox will use your activity on that software to evaluate your account. And you can borrow up to $100,000 through Fundbox with term lengths of 12 weeks or 24 weeks. Flat rate starts at 4.66%. What are the pros and cons here? Pros, we have quick time to funding, a fast and easy application process, low credit score requirements. The cons, rates can be expensive and frequent repayments are required. And one thing I want to say here is that the Fundbox is really the ultimate lender that specializes in offering financial products to small businesses and solopreneurs. All right, and the thing here is that they actually stand out because it's super easy. They have a easy interface, easy application process, and you can qualify for their products. They don't require a specific time in business. Think about it. That's fantastic. They have low borrower requirements, which make their services useful for many B2B and B2C businesses, including small businesses and even freelancers. So while P2B Investor and Riviera Finance wants you to be in the B2B space, Fundbox doesn't care. Whether you are in the C2C, in the B2B or B2C, they'll take your application. They will welcome you. All right. And one thing we also love is that Fundbox actually is able to accommodate whatever industry you're in, as long as you're not in a prohibited industry. You're not in one of those sort of adult entertainment or marijuana, anything that is legit right now. You can actually apply through Fundbox. Just be aware of the fact that the rates can be expensive. The rates can be high. That's all you need to know. Number one, folks, when it comes to the best emergency business loan for bad credit, no personal guarantee, On Deck. Our score, 10 over 10. This is best for an emergency business line of credit. They actually, On Deck offers both fixed-term business loans and business lines of credit. And On Deck is not really the cheapest way to get a line of credit or emergency business loan, but its fast application process and relatively low borrower requirements make On Deck a solid option to fall back on. On Deck is kind of similar to Fundbox. So credit limits range from $6,000 to $100,000 with repayment terms of 6 months with no draw fees, and you'll have a slightly less punishing repayment schedule than you would with most short-term loans with weekly rather than daily payments. With Fundbox, in some cases, you might have daily payments. All right, so what are the pros and cons here? The pros of On Deck: borrower qualifications are lower than a traditional banks would be. You have lower costs for repeat customers. So if you are a repeat customers on Deck, you do receive discount points. So the loans become cheaper and cheaper as you stay with them, as you stick around the On Deck's platform for a long time. The application process is fast and easy. Funds are disbursed quickly. Sometimes can be in a matter of hours. And what about the cons? Financing is not available in some states. Is not available to businesses in some industries, including the restricted industries, and rates can be expensive. So if you really think about it, On Deck is kind of similar to Fundbox. But one of the reasons why we have given On Deck 10 over 10 is that they were recently acquired. They were acquired in 2020 by the fintech lender Anova, and so we expect a lot of innovation on that front. An expansion of their services, an expansion of their products and services, and this is one thing that the market was happy to hear about. One thing that you also need to know is that we gave On Deck 10 over 10 because they offer two types of emergency business loans: short-term emergency business loans and revolving emergency lines of credit. So this is one of the reasons why they have this over Fundbox. Fundbox does not have a credit line available for small business owners, but On Deck does. So, and the cool thing here is that if you need a loan fast or don't qualify elsewhere, it's hard to beat On Deck. Despite the potential drawbacks, On Deck is transparent, customer service is easy to get in touch with, and overall, most customers report positive experiences. I'll be right back right after this. Don't go anywhere. All right, folks. Thank you so much for your attention. I really want to quickly recap today's conversation here. I'm showing you on the screen here. We have a comparative table that shows the pros and cons of each player here. And you can see that On Deck is best for an emergency business line of credit. Fundbox is best for same-day business funding. Lendio is best for an emergency business term loan. Riviera Finance is best for funding unpaid invoices. And P2B Investor is best for a variety of emergency business loan options. And in terms of the scores, we have number one, we have On Deck 10 over 10. Number two, we have Fundbox 9.5 over 10. Number three, we have Lendio 9 over 10. Number four, we have Riviera Finance 9 over 10. And number five, we have P2B Investor 8.5 over 10. Thank you so much for your attention. Really appreciate it. I will see you next time. But until then, remember, stay marvelous.